Morgan.
Hey everybody, this is Dr. J with a weekend edition of Talking Stocks. What am I going to do today on a Saturday afternoon? If I can figure out how to write on a whiteboard, that would be an accomplishment. I want to look at the spiders. SPY. I want to look at the diamonds. DIA. And I want to look at at least three of my favorite biotechs. Come on, mouse, don't keep disappearing on me. I've been having trouble with the connection to the mouse. Oh, come on. Now I have the mouse. I'm having a lot of fun drawing all over the place. Yeah. All right, so I also want to look at, it's a nice drawing in there. I want to look at least three biotech stocks that I think can go up 5 times during 2023. At least 3. So that's on the agenda for today. The general direction of the market, the spiders and the diamonds, and 3 of my favorite little bios. So that's that. Now, you shouldn't experiment with things that I don't know about, right? Whiteboards. Now I get rid of this whiteboard. All right. That seemed to have worked. Now let's see if share screen works. See, I'm learning while I'm talking and while I'm thinking. You've got to think about what to say, so I might as well waste a little time playing with Zoom, Kathy Wood's favorite. Zoom. I'm zooming. So I want to share a screen. Oh, lo and behold, look what I have when I share the screen. I have spiders, SPY. Well, I drew in the descending trend line that everybody's talking about. Nothing unique to me. The descending trend line goes back to the highs of January, whatever it was, 4th, beginning of the year essentially. And we have 3 or 4 hits on this trend line. We had a hit on Thursday. We bounced off the trend line, but did not try to go down. We actually went down below the 200-day moving average, only to close above it on a strong rally back from the lows of the day. Now, why did it go down so much at the open? I got to remember, because Friday seems like forever. No, it was just yesterday. We went down a lot on Friday morning because the jobs report was better than expected. That means people are employed. I don't think that's such a terrible thing. And it really wasn't that great when you look at a lot of the underlying numbers, but nevertheless, it was a beat. And good news is bad news. Because the way it works is if there's wage inflation, the fear is that we get this spiraling wage price inflation. So the wages go up, the prices go up. But in reality, the wages are not going up faster than inflation, so the worker is still behind. And I don't think it's causing a spiraling of the inflation. I think the inflation is pretty tame. I mean, not that it's pretty tame. I think it's going to, it's reached its peak. So I think the numbers that we've seen in the 8s are gone. I think we continue to see it drift down to 7, 6, 5. Maybe by middle of next year, we're at 5% inflation, something like that, or even less. So do we have to go into a recession in order to achieve this? That's what a lot of pundits are saying, that the Fed is going to plunge us into a recession. But I found Jay Powell's words a little reassuring when he spoke on Tuesday. I think he spoke. It was reassuring, and it was so reassuring that you see this big green candle that happened on Tuesday or Wednesday, after Powell spoke, whatever day that was. So Powell moved the markets when he spoke, and he basically said that we may not have to do too much more hiking to accomplish what we need to accomplish. And I agree with that. So I think the terminal rate is going to be 4.75 to 5%. And that means we're just about there. After the 50-point move, maybe we get one more 25-point raise in January and done. So the fear is largely because the 3-month Treasury bill is 85 basis points higher than the 10-year Treasury bill. The fear is recession. And it seems like every single time this has happened since 1969 or 68, whatever, we did enter a recession. But with everyone calling for a recession, I wouldn't be so sure if we don't go into one. I think there's a possibility we skip the recession. I think there's a possibility that next year, 2023, will be a banner year. I mean, there's also the possibility that things can go wrong. The war in Ukraine can heat up. The price of oil could zoom once more due to OPEC going crazy if they decide to go crazy and lower production. All kinds of possibilities exist, but I think China is going to loosen their COVID policy, zero COVID. I think the things will tame down with respect to the war, tone down. So I'm optimistic about the geopolitical situation. And I think 2023 will be a banner year. In the worst case, as Bank of America is calling for, SPY 300. I suppose that's possible in the worst case. But I'm not looking for the worst case, I'm looking for the best case, which would be SPY 500. So three things can happen for the spiders going next year. Either they stay essentially the same in this 4 of 10 area, 405, or they move up or they move down. I'm gonna say up. My call is up, the optimist that I am. And also, I like the near-term chart. Even though we're bumping up against the descending trend line, I think that we're still contained in this nice ascending channel that I drew in. And as long as we're in this ascending channel, and I said this over and over again, as long as we stay in between these two lines, we're going to be moving up, not down. So notice something's got to give by December 15th or so, December 11th even. We're going to come to a crossroads between this descending trend line and the lower ascending trend line of this upwards channel. So one way or the other, we're going to find out probably right around the same time that we get the CPI report, which I think is Tuesday, the 13th of December, something like that. I have my dates right. And the next day, we hear from Powell again as to the 50-point basis rate hike, which I expect. So here we have it with the spiders. Tells the near-term picture anyway. we're not overbought. We're closer to overbought than oversold. So I mean, it's conceivable we go back up to 431, the previous August high, and put in a double top at least for a while. Let me draw that in. Okay, there we have the double top at about 431.73. I mean, potential double top. I think we're going to go through this descending trend line and test the recent highs of August 16th, with the possibility that we close the year higher than that, maybe up towards this high of 329, 462. If we do, that would be about a year. That would be like a big win for the longs. And even though we're looking at only a month to go up 60 points, I've seen it before, 15% move in a month. It seems like ridiculous. It can't happen. Believe me, it could happen. I'm not saying it will, but it could. More likely we end the year somewhere around 431. I think I'm going to stop without looking at the Dow and call this video over. And if you really want to know about my biotech picks for next year, I'll have another video shortly with my favorite bios. Meanwhile, this video will limit to the direction of the Dow and my other markets, SPY, and I'll be back with my video on three of my favorite biotechs. So I think you can make 5 times your money. Well, I'm hoping to make 5 times my money next year. That's it for now. Good chatting with you all.